Hello everyone. This is the pre-market report video for 29th December 2022 in terms of Nifty and Bank Nifty. As most of us know, but just a reminder, today is the monthly expiry day. Anyway, let's get into the topic. Yesterday, before the US market opening, Reuters released the article with the title named Chinese hospitals and funeral homes were extremely busy. In that, they tried to show the actual situation in China. For example, they interviewed the ambulance driver and he declined to identify himself and he said that he has been driving ambulance for over 30 years and this is the busiest he had ever known it. The official Chinese government reported just 3 new COVID related deaths for last Tuesday, but Reuters explained that it will be much more and much worse. This kind of created the panic among the investors regarding that issue. A tug of war on demand between the rising COVID cases that can restrict the activity and the recent Chinese move to ease the restrictions. As a result, this concern made the oil price to drop around 2%, which in turn pushed the WTI crude oil again below $80 per barrel. At this time of this video, WTI crude oil was traded at $78.5 per barrel and Brent crude oil was traded at $83.5 per barrel, which subsequently results in huge pressure on all energy stocks in US. Then about the tech stocks, research firm called TrendForce released the report that iPhone shipment won't recover in first quarter of 2023. And also there are some articles stating that Foxconn's Apple production facility in China got the labor shortage. All this created the iPhone supply worries and pushed the Apple stocks to down over 3%, which subsequently increased the 10-year Treasury bond yield to near 3.9%. I hope you guys remember, last week 10-year Treasury bond yield was around 3.4%. Now in 3-4 trading sessions, it increased by 12 to 15%. As we know, there is a general thumb rule, bond yield increase always puts pressure on tech stocks. Exactly the same has happened. Almost all the tech stocks except Tesla was under severe pressure. Netflix dropped over 2.5%, Google and Amazon dropped around 1.5%. Tesla didn't. Since day before yesterday, it dropped over 11%. So last night, Tesla increase was just a dead cat bounce. So basically last night, both energy and tech stocks drags the US market severely. In the end, Dow Jones dropped by 1.1%, S&P 500 dropped by 1.22% and Nasdaq dropped by 1.35%. Day before yesterday, VIX increased by around 4% and last night it increased again by another 2%. It's just a bad negative momentum at present in US. For that matter, this whole year itself is not a great year for US stock market. It all started because of this back-to-back crypto meltdown. Couple of months ago it's Luna and now it's FTX. All big players like BlackRock and SoftBank all invested in those crypto and crypto-related startups. Now FTX becomes nothing, zero. So those big investment firm, in order to show better yearly results, they are booking profit in tech stocks in US market, which had a very good run up of couple of years. If you look at the S&P 500 year to date, it dropped over 20% and Nasdaq dropped over 34%. This fall or drop is not as big as 2008, but this is the second biggest drop. Amazon dropped over 50% in 1 year. Tesla down by over 70% and Facebook down by 65%. Even Google and Apple dropped over 40 and 30% respectively. So basically, US is heading towards the second worst ever year in stock market since 2008. Then regarding Indian areas, it's not that bad. All the stocks closed flat to negative. In fact, last night most of the time, Wipro was significantly positive, but it too closed marginally negative. About SGX Nifty, at 3 am Indian Standard Time, it closed at 18,066, which is indicating 60 to 70 points gap down opening. So this is what happened last night in global market. Now coming to India related info. First, after our market has today, from tomorrow, Nifty will be with a new weightage factor. Based upon that new weightage factor adjustment, Money Control released that HDFC Bank, ICICI Banks and Airtel will get the additional fund of 29 to 16 million US dollars. And whereas there will be a huge fund outflow in the range of 57 to 19 million US dollars from Axis Bank, Bajaj Finserv, SBI and Bajaj Auto. I don't know, but for sure this FII and DII people will play the arbitrage game in those stocks. And the second news I like to highlight is that from today onwards, there will be a duty-free trade between India and Australia. So this is positive for those companies who imports raw materials from Australia and also who exports their goods, which is over 6,000 sectors. And this free trade deal is giving advantage to all Indian textile and leather companies over Chinese and Bangladeshi players. So I expect at least leather stocks to trade positive today. Then the third info is regarding Reliance Industries. Yesterday, it was their company's family day and they celebrated Mukesh Ambani's 20 years journey as a leader. Because of that, they did made a lot of positive report and announcement. But there is another report that there was a network issue yesterday for over 56% of Reliance Jio users. So I don't know which will weight it over which, whether their positive announcement or this network outage issue. Then the final one I want to discuss is regarding the auto sector. Yesterday in the aftermarket house, Union Minister Nitin Gadkari mentioned that India is going to double its auto industry from the present 7.5 lakh crore rupees industry size to 15 lakh crore rupees industry by 2024. Which means from now on, it's just 2 years, 50% growth for auto sector, which is unimaginable. So this is very, very positive for all listed auto stocks. As a summary, US market closed negative, SX Nifty indicating 60 to 70 points gap down. Both IT and banks Indian areas were closed negative. So all kind of indicating the negative momentum today. But the Indian stock fundamentals are really looking good. So I guess it's again a tug of war between the good India related info versus the bad US momentum. Let's see. Then regarding the items we need to look out for today. At 2:30 p.m. Indian Standard Time, there is a schedule for release of Europe's new loans issued for non-banking and financial companies for November month. Then in the night, it's usual Thursday, US weekly initial jobless claims and crude oil inventories data. Regarding jobless claims, market expecting the bad number. So that bad number can slow the Fed aggressive interest rate hike in the next meeting. Then regarding inventories, crude oil addition can put further pressure on oil price, which is what India wanted. So these are the items we need to keep an eye out today for the impact. Now coming to technical, as usual, everything we are going to discuss in this section is based on just a daily chart. Regarding the subject, if we consider the last 3 days, Nifty for sure and clearly forms a upside Tasuki gap formation and Bank Nifty to some extent forms the same. Generally, upside Tasuki gap demonstrates an uptrend. If we analyze the patterns, the third candle indicates a pause in the trend as the bearishness attempts to move the price lower, but it cannot close the gap between the first and second candle. The bearishness inability to close the gap suggests that the uptrend will likely to continue. About moving averages for Nifty, there is no change compared to yesterday. It's still below the 10, 20 and 50-day moving averages. So as a summary, it's same neutral. Then about technical indicators, same. As a summary, it's a strong sell. Since more number of indicators now are indicating either overbought or sell signal. Even RSI is same as yesterday as the value at present is 45. For Bank Nifty, there too no change. It just broke the 10 and 20-day moving averages. So as a moving average summary, it's a buy signal. However, some technical indicators are indicating the sell signal. Some were neutral and some were overbought. Thus, in case of technical indicator summary, it just sell. Regarding RSI, the value is 50, so it's marginal neutral. From option change in open interest, again there was a significant call option unwinded at 18,000 and huge number of significant new put options were added at between 18,000 and 18,100. 18,100 got the maximum new put options followed by 18,000. If we see the overall options open interest data, 18,100 got the significant short straddle and 18,000 got the maximum nearby put option open interest, and thus 18,000 is the support we need to look out for. Regarding call option open interest, 18,200 got the maximum call options followed by 18,500 and 18,300. So 18,200 is the immediate struggle to break. Breaking that, 18,300 got the potential to resist the advance. Then coming to Bank Nifty, based on change in open interest, significant call option unwinding took place at below 42,700 and significant number of new call options were added at above 43,000. I can't conclude any, so based on overall open interest data, significant short straddle were present at 42,800. Then the maximum call option open interest is present at 43,000 and followed by 43,500. Thus, 43,000 is the immediate hurdle to break and 43,500 is the strong resistance to break. In case of put options, 42,000 got the maximum nearby put option open interest. Thus, 42,000 is the strong support. So that's all in this video. Hope you all got some useful information. Please consider subscribing the channel and liking the video so it will help me beat the YouTube algorithm and will also motivate me to do more. Please don't make any investment decision based on this, as I'm not a SEBI registered advisor. I'm doing it for my and viewers' educational purpose only. Thanks for watching.